Okay, so those were some of the top headlines that have shaped up the trading week gone by. Friday was also quite a good day of trade, 1% uptick coming in on the Nifty. But if I have to zoom out and take a look at what the weekly momentum on the Nifty has been, remember, last Friday for the week we ended with meager cuts of just 0.2%. This week Nifty has ended with gains of about 0.5%, and given all the escalation that we've seen on the geopolitical front and how the Asian markets, particularly Kospi and Nikkei, have reacted to that, we as a market have been much more resilient, and we've managed to eke out that 0.5% gain, so looking good on that front. Nifty Bank is also advanced for the second consecutive week. However, what did not look very good in the week gone by was the broader end of the market, because you did have a shave off of about 1% for the Nifty mid-cap index. It snapped its 2-week gaining streak. Similarly for the small cap index as well. Remember, this was a 5-week gaining streak coming in a row for the Nifty small cap index, and that has now been snapped to the quantum. That loss has been to the quantum of 0.6% for the Nifty small cap index. On the flip side, IT has been a turnaround sector in the week gone by. Of course, it focused on the back of earnings, and you have got some good gains coming in over there. 4.5% uptick on a week-to-date basis for the IT index. Auto has also ended the week with gains of about 1%. What's not done well on the flip side is Nifty Realty, the biggest sectoral loser this week, and it has shared more than 2% in the week gone by. On the flip side, if I take a look at some stock-specific action, of course, TCS was the biggest Nifty gainer of the week, 10% higher on that one. TCS, Tech Mahindra, HCL Tech were in fact the biggest top 3 Nifty gainers, all from the IT pack. L&T has shared 3.25% in the week gone by, so that was one weak stock to watch out for, along with the Bajaj Finserv and Grasim. All, in a nutshell, this is what the week gone by has looked like. But let's now put the spotlight on the week to come. What are going to be some factors, some events, and some cues to be watching out for and keeping on your radar for the next week of trade? Let's bring on board Meryl with all of those details.
Yes, these are some of the major cues which could shape markets in the upcoming week. Initial jobless claims data is going to be in focus from US and UK. UK and Japan will be tracking CPI data, while CPI expectations will be in focus coming in from the Eurozone. China will be announcing loan prime rates data, while on the 20th of July, markets will be closed in Japan on account of Marine Day holiday. In terms of global earnings as well, it's a major week. Alphabet, Tesla, IBM and many other companies are going to be announcing their quarterly results. And back home in India as well, it's a major Nifty earnings week. We've got Bajaj Auto, Eternal, Nestle, Dr. Reddy's Labs, Infosys and many other names in focus, where we're going to be watching out for their first quarter earnings. In terms of corporate actions and board meetings, do watch out for Pondy Oxides, where the 21st of July marks the X date for the company's stock split in a 5:2 ratio. And in the primary markets as well, Alpine Texworld and SBI Fund Management's IPOs are set to list on the exchanges. In terms of other events as well, do watch out for the European Commission's provisional deadline on the Paramount Skydance's proposed acquisition of Warner Bros. Discovery. That one's going to be taking the headline. And we're also going to be looking out for the status hearing scheduled for former Venezuelan President Nicolas Maduro in his US narco-terrorism and drug trafficking case. Do watch out for the temporary 10% US global import tariff, which is set to expire on the 24th of July unless the Congress extends it. So these are some of the major developments to track in the upcoming week.
Okay, thank you so much for that, Meryl. You know what really stood out this week around is the fact that you saw a sharp spike in oil prices, but our markets back at home have been extraordinarily resilient. It's a 12-15% spike is no mean feat, and we've still been very, very resilient. Let's try and contextualize how this week has played out and the learnings from it, and what could possibly be in store for next week. And we have with us A. Bala, who's Managing Director and CEO at Aditya Birla Sun Life AMC, joining us this afternoon. Great having you here, Bala. Let me first start off by understanding from you, what do you make of the move, right? I mean, so much resilience in the Indian markets despite the oil price spike. Are we now in a situation that this may not be a negative surprise for us anymore, and markets are basically signaling that they're very comfortable regardless of any decent spikes, maybe not major spikes, but decent spikes in oil will be looked through? Is that something that we can comfortably say?
Yeah, I think the way things have been moving, in fact, we as a market have been corrected a little ahead of time. especially post the Iran-Israel conflict started. I think India was one of the major fall we have seen. We have seen continuous FIIs outflow on the back of that, and oil price has been touched about 100. There was some amount of panic. We must also, of course, during the same period, our GDP print has been quite strong. Our GST collections have been quite strong. Even the auto numbers that came in the last month also have shown some bit of uptick, and the interest rate somewhat has remained stable. And the RBI also announced the FCNRB deposits in order to attract more flows. All these things, I would call it as something is the reflection of the resilience of our economy, despite all the uncertainty being there. And last but not the least, the government initiative in order to drive the, I call it as a Reform 3. Though the government has not said anything in Reform 3, the way I think government has reacted, especially to towards the energy sectors last week. Also, the electronic manufacturing sector, they've extended the PLI scheme for about 5 years. All those things means that India's economic growth should actually bounce back. And last but not the least, some of the IT companies, the results and the guidance they are given somewhat reinforces the confidence. While they could have been a bit bad for the industry, but however, each one of them actually rediscovering themselves in order to drive the future growth. Therefore, the guidance that is coming from some of the companies also, in some sense, I would say, makes everyone feel that more or less we are done with the fall, and we must actually start reflecting on the growth momentum. And last but not the least, the AI trade, my own belief is the AI trade globally, while one can say is real, but the excess valuation that got set in actually in the AI trade may also face some kind of reaction. The way SpaceX fell by about 20% few days back. In my own belief is our own understanding is that the global market may get into some kind of volatility that could in fact benefit Indian market, so to speak.
Okay, point taken. Mr. Balasubramanian, hi, this is Snehi also joining in. You did say that you believe that the worst of the market is behind us for now. But going ahead, what could dictate the upside that we could see in the market here on? Is it going to be the geopolitical factors that are going to dictate the way the market moves? Or do you believe that our domestic factors like earnings could be substantial enough to block out all the noise coming in geopolitically?
Yeah. I think the first and foremost, the step that is being taken to calm the overall geopolitical risk, given the fact that it has not been benefiting anybody, whether it is US economy or whether it is Gulf countries, has not given any benefit to anybody. Therefore, there is a high realization, I would assume, is coming into place in the global economic space to put the geopolitical risk to the rest, which in my own belief is only a question of time, though the current oil price, which you have seen of late, is being ignited in the market. With that kind of hope that the current geopolitical risk somewhat will settle down, it will get normalized. Therefore, business will be back to normal. As far as India concerned, one is of course earnings expectations a little better than what is being expected. If we are able to print a nominal GDP of close to about 11%, with inflation now coming back to about 3.5 to 4%, I would assume even the corporate earnings expectation for next year would also go to about 14 to 15%. Therefore, the market valuation will be considered as for something to consider for one to come back on the market for buying. And third is the government is also, of course, has been realizing these are the time actually that they have to do some more work with respect to the ease of doing business and investing more on in certain sectors in the market, which make India more resilient. At the same time, government push towards some of the taxation aspects, knowing very well that if you have to attract foreign investors in India, there is a high probability which government may consider related to some taxation issues, which could be a stumbling block for foreign investors invest in India. So I would assume for the next 3 months could be an action month, and India, in all probability, may take many steps which would be different from the rest of the world, and therefore it could boost the overall market sentiment.
Okay, understood. And if you had to look at the market from a top-down view, Bala, right now, which sectors would look more attractive compared to the others? And let's start by getting a little specific and talk about IT. How have you looked at the IT earnings, all the news flow that's coming in from overseas in terms of AI developments? And where do you believe IT as a sector is headed?
So I think IT sector, I think our own belief is it got beaten on very, very badly the last few months. For obvious reason, we can say. At the same time, as a result of substantial fall, and also the way Indian companies historically have bounced back, rediscovering themselves in the new AI world, and most of the companies already started announcing what is their plan and how the order book will increase And recently, as recent as Wipro has made a statement that probably AI will start benefiting them. I think that's the beauty of our Indian companies, having seen multiple cycles. The probability of each one of them figuring out how they can participate in the AI-led growth while keeping the traditional business intact. Therefore, valuation comes into play, and we as a fund house have taken a contract call in the sectors. That's one. Second is the FCNRB deposit announcement which has come. Clearly, from the bank balance sheet point of view, the both the liability side and asset side, I think both will get a booster with the FNRB deposits coming in before September. And as it is, on the basis of the information that is coming from bankers, we are seeing some kind of reasonably good response coming in this space, which also in my own belief is the private sector banks which got bitten very badly and then brought down the valuation below 2 times price to book. Also, we see some kind of merit for the financial sectors to bounce back. Of course, the engineering and energy sectors continues to remain a dark horse from the overall market perspective, in a broader sense.
And what do you make of the commentary coming out from IT? Because that was the other thing that stood out this week. You had those slew of earnings coming through and commentary also coming our way. While there was nothing specific with regard to pivots towards AI or adjustments made towards AI, Bala, would that at all bother you? Or it's just the valuation which is looking so lucrative at this point that's leading to this move?
So, of course, the AI is something we as a fund house, of course, we see as real, as in not something is something one can ignore. And given the fact that the new world is going to be largely run by the AI as an infrastructure. But having said that, whether Indian companies are able to both upskills and find their roadmap in terms of AI world, this was something we see it coming from all the bigger houses in terms of narratives. I think one is the result, second is the valuation, third is the clean balance sheet. And then how they are looking at actually the new business opportunity that they are saying as probably an opportunity rather than a threat. And most of the companies are seeing it as an opportunity for them to rediscover themselves and what they can play, which is the beauty that some of the experience of Indian companies have showcased all these years. Something makes us believe that something we have to have a leap of faith and take a valuation-based call at this point of time, with also the assumption that these companies, as they are putting their best effort as to what play they can what role they can play in the AI space, is something makes us believe that there is high probability it can bounce back from here.
And what about banks, Bala? You know, it's going to be a tussle of heavyweights when you look at the reactions, stock reactions come Monday. But give us a sense, is that also a pocket which is waiting for results to kind of make that inflection?
So I think the banking, there are two things. One, of course, credit growth has been better than the previous 2 quarters. I think we are seeing credit growth much better than the deposit growth. And deposit growth also has been inching up. The FCNRB deposits definitely improve the overall credit deposit ratio. We'll have more money in the hands of banks, and that would a lower cost compared to the current fixed deposit that they have. I also believe that whatever the high fixed deposit they would have taken in the month of March, all of them will actually come for maturity. Therefore, the FCNRB deposits, with the government and Reserve Bank of India bearing the cost of hedging, I would probably assume it could be a win-win situation for banking industry. One, to meet the growing demand that is coming on the credit side, and second is cost pressure, which otherwise was having that was bothering for banking system till March, may also get some kind of easing of trend. And these two put together, I think, could only be better from the overall balance sheet perspective. So that's one of the reasons our own belief is banking as sector should do well.
Outlook on banking. Bala, what are you making of consumption? Curious to know how you think the consumption space is going to be performing in this quarter in terms of earnings. It could be staples, it could be discretionary. What are some pockets that you are liking or not from the consumption pack?
See, on the consumption side, though we have seen a significant underperformance, but however, within consumption, if you take certain pockets of the consumptions, if you take two-wheeler industry, the way is growing with nothing but a reflection of the demand coming both from urban and rural demand. And again, if you look at the electronic manufacturing growth, again, rural demand continues to remain high, even urban demand continues to remain high. So therefore, the consumption have to be not looked at it as overall sectors. But I think in the select pockets, we believe that I think we'll see improvement coming in. But having said that, consumption sectors also have to be paid in linking to the 8-pay commission, which will get rolled out as we come closer to 2027 January. I think government is supposed to announce this year. And that, in our belief, is could be a good booster for consumption-led growth to come. But having said that, of course, the monsoon impact to some extent, I would assume it will have drones to play in the overall consumption pattern changing. Especially that will come largely in the real estate sector, which I think you mentioned about it earlier. But otherwise, broadly, consumption, I would say it should be on the stable to uptick kind of thing that we can look at as we see the 8th pay commission also getting rolled out.
Okay, Bala, I'm going to have to pause this conversation for just a few minutes, slip into a very short mandatory commercial, come back, take a bit of a breather, come back and quiz him more with regard to what the outlook is. What could sector rotation play out over the next week or two? What are the pockets which look attractive? We've spoken a little bit about those. We'll talk more on the other side. Stay with us.
Back with Market Edge, and we're in conversation with A. Bala. He's been sharing some of his views with us in terms of which sectors look good. So far, we've spoken about IT, banks, and consumption. While we're talking about some of the heavyweights, Bala, also give us your view on pharma while we're talking about defensives. Do you believe that largely this entire hype around GLP-1, CDMO, all of that has played out, or do you believe that there is more runway when it comes to some of these opportunities within the pharma space?
See, one is, of course, pharma space this time got some kind of booster for two reasons. One, of course, the investment that they have been making on R&D for the last almost few years finally see some kind of success ratio on that in terms of some of those innovation in which they have made investment. Now they're able to convert into a product, and therefore the volumes have been, of course, getting better. And second is tariff war. Initially, there was some kind of fear US tariff war will also have some kind of impact on pharma, which has not been seen yet. And therefore, there also is something which was as one of the hanging sword, has been helping the pharma sectors. And third, of course, is the from an overall relative basis sector more immune to some of the volatility that we are seeing in. That's one of the reasons we are seeing some kind of outperformance. And our belief is will continue to remain somewhat a sector to be owned by the portfolio managers.
Okay. And Bala, other pockets, spaces which you would be positive on in a market like this, what should you go out and buy? Because things are looking better, right? I mean, the volatility is reducing. The association to crude is going down. You've spoken about banks, you've spoken about IT. What else?
So I think energy sectors, we have been quite bullish. I think with the oil price coming down, definitely it could be one of the beneficiaries for OMCs. And given the fact that even the petrol and diesel prices have been high, and subsequent to that, we saw energy prices dropping. And second is both thermal and renewable energy. I think a lot of work is being done, and related sector to the energy would be a large beneficiary, right from power generating companies and to the transmission companies. Even the related sectors to the energy, we are quite bullish. And not the last but not least, which is the automobile sectors, especially the auto ancillaries, have also been seeing some kind of significant improvement on the performance, as well as in terms of the replacement market is also seems to be playing quite big role in the space. Therefore, auto ancillary also selectively as a fund of their bullish.
And Bala, how should one look at OMCs? I was reading a note earlier this week where a brokerage house was extremely bullish with regard to OMC. Said the resilience within the OMCs from a balance sheet perspective, from an earnings perspective, has gone up manyfold versus past cycles. Should we look at OMCs differently? Would you?
See, as a fund house, we did take a bit of contra call in OMC companies when there was a significant rise in the oil prices globally, and a subsequent change in the price. I think post the state election, the government also did hike the prices twice. That gave some kind of confidence back to the OMC sectors, which in our own belief is I think will continue to remain a sector, which of course is cyclical sectors, but a sector in some sense the balance sheet we cannot say at this point of time very weak after the hike in the petrol diesel prices. Therefore, the under recovery has got reduced, and then with the oil prices coming down, which our own belief is oil will settle somewhere around $65 to $70. So as it happens, I think OMC would be one of the major beneficiaries there. Therefore, overall basis as a fund house, quite bullish on the energy sectors. Again, within that, we have to break them into multiple verticals within the energy space.
That's a very bullish view coming in when it comes to the entire oil and gas space. But Bala, talk to us about how you're reading the markets in terms of what to avoid right now, given that this is largely becoming a buy on dips kind of market, and you're saying that the worst for the market is behind us. What would you still not be comfortable buying in terms of it could be either on the back of valuations or somewhere where you think the earnings growth this time may not be as attractive as other sectors?
I think very difficult to generalize any sectors given the fact that we are seeing the breadth and the depth in the market will continue to remain very, very strong. And also, the market is increasingly becoming more stock specific rather than any sector specific. Within the certain sectors, the broader outlook may not be looking that great, but within the sectors, there are companies that are doing very well. If you take textiles, there are companies that are ownable, and there are companies that are doing extremely well in the space. I think we as a fund house broadly focus more on the stock specific rather than taking sectoral call, given the fact that sectors like banking, they're again mixed, technology is a mixed. I think we are more stock specific focus we are bringing in. And therefore, very difficult to take a call in terms of which sector would be, given the fact that we are now seeing within the sector, there are multiple companies which are doing well. But in the power sector, there's a complete ancillary space is doing extremely well. So therefore, we'll have to probably look at more stock specific rather than sectoral view.
Last off, Bala, I wonder how you look at some of the earnings that have come our way, right? Especially from the FMEG, fast-moving electrical good manufacturers, where they've seen a bit of a damp margin number, right? But this is likely only to be cyclical, right? It's only going to be a one-quarter problem because commodity costs went up. Is this possibly an opportunity to buy if they re-rate downwards? I know they're expensive stocks in general, but could they be buying opportunities on the way down?
So I think we'll have to look at these sectors purely not on the basis of earnings, on the basis of the order book positions. I think given the fact that both the investment by the government, respective government, second is state government, and third is the private sector's expansion that is coming in. The order book position has been rising. Of course, each of the order book will not get fructified in terms of converting into revenue in a matter of, say, 1 or 2 quarters. I think it's a long, but the long-term execution that they will plan. Therefore, we'll have to look at these sectors not on the basis of the quarter-on-quarter earnings. We'll have to look at it on the basis of the broader order book that they have. Therefore, while some of the companies I mentioned about could be true on the short term, but that's something I would assume we'll have to link it to the order book and then see how both things gets linked.
Bala, since you've mentioned order book, the next sector that I want to ask you about is your view on defense. We've seen a lot of defense deals happening between India and other countries right now, and some beneficiaries have been doing well. How are you looking at this sector, and do you believe that the valuations at which the defense companies are trading now, after the little bit of a slump that they've seen, are now justified?
So, of course, again, it's a macro theme. It's a broader spending towards sectors. If you look at it the last 1 year, worldwide spending towards defense as a percentage of the overall expenditure has been rising, whether it is Europe, whether it is US, whether it is India. And the overall expenditure, the larger component expenditure, as they are spending on the infrastructure building, the equal amount of emphasis is being given on the defense sectors. Therefore, this sector has to be looked at it from the point of view of, one, the macro spending, which will happen over a period of time. And second, of course, the order book. Of course, in defense sectors, you will never get to know what is the real order book position, given the fact that everything is not disclosed as per these sectors. I think the basis the macro view, if you take, yes, this sector seems to be quite promising. If you go by the valuation, the sector may, at this point of time, may look costly. I think we'll have to take the company's both capability, the role they play, each of the segment, and basis we have to take a call. I think we are more stock specific in this space.
Understood. So that's your view coming in on a bunch of sectors. Bala, thank you so much for joining us today and giving us such a deeper sense in terms of how you are looking at the markets. Thank you so much for your time.
Thank you.
Thank you so much. Shifting focus then, viewers, up next, an exclusive roundup of the week's key developments from Maharashtra in our Maharashtra 360.
From major policy decisions and governance reforms to infrastructure expansion, social welfare and citizen-centric initiatives, here's a look at the key developments shaping the Maharashtra's progress in our special Maharashtra 360. Maharashtra has announced a major push towards safer and more efficient transport infrastructure, with CM Fadnavis unveiling the state's vision of making Maharashtra railway crossing free. Addressing a program in Nagpur, the Chief Minister, in the presence of Union Minister Nitin Gadkari, announced the construction of 145 railway overbridges over the next 3 years, while inaugurating 484 crore rupees worth of railway infrastructure projects across the state. The government has approved the construction of 145 railway overbridges as part of its long-term plan to develop the 524 railway crossing structures required across the state of Maharashtra. The projects inaugurated include 3 railway overbridges, 4 subways and 1 road underbridge, completed at a total cost of 484 crore rupees across multiple districts. Most of these works have been executed under 50-50 cost-sharing model between the Ministry of Railways and the Government of Maharashtra. The Chief Minister said that Maharail's adoption of modern engineering practices and innovative construction technologies is helping deliver railway infrastructure with greater speed, quality and efficiency. And the Maharashtra legislature's monsoon session concluded with a customary tea meeting attended by CM Fadnavis, Deputy CMs Eknath Shinde and Sunetra Ajit Pawar, along with legislators from both houses. Here's a look at some of the session's biggest takeaways. Among the session's key legislative milestones was the unanimous passage of the Maharashtra Women Farmers Empowerment Bill, alongside the government's decision to enhance the farm loan waiver limit to 2 lakh rupees. The legislature also approved supplementary demands exceeding 97,000 crore rupees and cleared the formation of a uniform civil code committee. And Maharashtra's push towards inclusive urban development received a major boost in Nagpur as CM Fadnavis laid the foundation stone for the Maharshi Sudarshan Valmiki Colony and the Swapnapurti housing project under Pradhan Mantri Awas Yojana 2.0. Announcing the appointment orders for around 500 personnel would soon be issued, the CM reaffirmed the state government's commitment to the welfare of the sanitation workers alongside affordable housing for economically weaker sections. Union Minister Nitin Gadkari described the initiative as a commendable project that will significantly improve the quality of life of the Valmiki community while also providing permanent homes to hundreds of families. Under the Maharshi Sudarshan Valmiki Colony, the Nagpur Municipal Corporation will construct 392 two-bedroom apartments exclusively for sanitation workers. The Swapnapurti housing project under PMAY Urban 2.0 will add 518 affordable 1 and 2 bedroom homes for economically weaker families, taking the total to 910 new dwelling units. Both the projects are targeted for completion within 3 years and will include modern amenities such as solar power systems, water supply, landscape gardens, playgrounds and security infrastructure, with the Chief Minister directing that construction quality be maintained at the highest standards. And Maharashtra Deputy CM Eknath Shinde has reiterated the Mahayuti government's commitment to building a safe, capable and developed Maharashtra, outlining its priorities during his reply to the final week motion in the Legislative Council. Shinde said that the government is simultaneously strengthening disaster management, infrastructure, citizen welfare and governance reforms, while also at the same time accelerating redevelopment and public service delivery. He also highlighted the state's focus on technology-driven administration, women's safety and transparent implementation of development projects across the state of Maharashtra. Shinde said that the government is strengthening disaster preparedness through faster emergency response systems, while also at the same time adopting a zero-tolerance approach towards cybercrime, narcotics and crimes against women. Maharashtra Deputy CM Sunetra Pawar visited the landslide-hit Patan village in Pune's Mawal Taluka to meet the Tikon family, which lost 3 members after a rain-triggered hail collapse buried their home near Visapur Fort. Now, expressing condolences, she assured the family of the government support and also announced that 12 lakh rupees at the rate of 4 lakh rupees per deceased had already been credited to the family's bank account, while an additional 1.2 lakh rupees has been sanctioned under the Gharkul housing scheme to help rebuild their house. Pawar also reviewed the situation with district officials and said that the government will ensure comprehensive rehabilitation for the affected family and the surrounding area. And those were all the updates we could pack for you in this edition of Maharashtra 360. Until next week, take care.